High prices of gold could play a spoiler this festive season. The World Gold Council, in a report released earlier today, has said that it sees the lowest demand for the yellow metal in 3 years this season. In fact, prices of gold are already near record high levels, and the council says that the October to December quarter, which traditionally sees the highest sales during the year, could see the gold sales dip this time around. This is despite the festive season being underway and the wedding season being around the corner. For more on gold sales and prices, we now have Navneet Damani, Head of Commodities Research at Motilal Oswal Financial Services, joining right in. Navneet, welcome to the show. Tell us, do you agree with the World Gold Council indicating a lackluster demand for gold this festive season?
Hello, Sakshi, and thank you for having me on the show. Well, largely that has been the consensus that we've also been receiving from the ground level, that the demand is pretty sluggish at this point in time. And since the recovery in gold prices from 56,500 levels to 61,000, it's becoming more and more painful for the jewelers and for the global for the jeweler community and coins and bar distributors to sell at this point in time because of the higher prices. And it's a very short span of time that you've seen gold prices run up by about 10%. In a matter of 20 days, prices are up about 10%, and we are heading towards festival season. We are heading toward a marriage season, and that is why the demand has been pretty lackluster.
So, Navneet, gold demand in India usually strengthens towards the end of the year, and especially in the October to December period, which coincides with the traditional wedding season, major festivals including the Dussehra and Diwali falling in, when the bullion buying is also considered auspicious. But why has it not picked up like usual trend? Is it due to the sky-high prices?
Well, over the last 4 5 years, we've seen that there is no particular trend as to when the gold prices are kind of in favor and when they are not. It is more of a bargain hunting commodity at the moment. In the last 5 years, that we've seen that whenever prices are lower, people tend to start accumulating or buying at lower levels, and whenever prices are higher, you tend to witness a resale or probably bars and coins coming out of households and coming into the market for selling, and that is what the trend has been for the last few years. Now of course, October to December is generally a season where you have Dhanteras, where you have Dussehra and Diwali, and followed by a huge wedding season, which typically leads to big demand for gold. But that has not been the trend. You don't purchase at the very last moment before the wedding. You tend to plan your purchase well in advance, and
Sure.
so bargain hunting levels is where I think most of the bargain is happening. And when prices shoot up very significantly, there is a detrimental shock which comes to demand.
Right. So let's talk a little bit more on the prices front also, Navneet. The local prices for gold jumped this week to 61,396 rupees per 10 grams, near the all-time high levels of 61,845 rupees that was hit earlier this year. Last year, in this period, we had seen that the gold prices were nearly 20% lower than what we are seeing already this year. Is that also a major cause of concern, and where do you see the prices moving to now?
Well, I think people have got accustomed to higher prices, and 55 or 60,000 does not really bother many people in terms of if they're wanting to buy gold. But there have been a lot of alternate investments that people are looking at. You've seen good run up in equity markets, and you've seen small cap and other indices giving you abnormal kind of returns, and that is where a lot of money is going from the retail sector towards these assets. Now, having said that, I also feel that gold prices have had a bit of their run up, and this is largely geopolitics which is driving gold prices. You saw a huge jump in prices to $2070 or probably 62,000 levels during the Russia-Ukraine war. And for much of the last 18 months, prices were in a falling trend or in a consolidation matter. So in the last 20 25 days, Israel and Hamas escalation has led to the jump in prices. Otherwise, there was no major reason where you would have seen such a sharp spike in gold prices. So I think once this settles down, once there is no major escalation in war, prices are likely to consolidate, and that is also keeping some of the participants on the edge in anticipation of lower prices in the near future.
Okay, so investors perhaps still on the edge waiting for the prices to cool off. But what would your own prediction say? Until Diwali, will the rising trend continue? Will we retest the record highs that we have touched earlier this year before consolidation takes place and the cool off takes place?
Well, in the previous interaction we've had with you, we were anticipating that prices could cool off to 55,000 from 60, 61,000, and it did cool off, but towards 56, 400, 500, and then reversed very sharply. We're currently trading at 61,000 plus.
Yeah.
I feel that the incremental gains from here probably in a 2 3 months time frame is pretty limited, and the risk reward favors that you could wait on the sidelines for a reasonable corrections. If at all there is no major escalation in the war, it is likely that you will get it 5% lower from current levels. That is where one should be looking to invest
Okay.
from a probably 12 months perspective. Over the next 2 3 months, I don't see any big bang returns, but from a 12 months perspective, about 5 to 8% upside could be on cards.
So in case I have to ask you, looking at the current price trend and the projections that you are sharing with us, if somebody is wanting to invest in gold in the current festive season, where would you advise them to invest into? Should it be in the physical form of gold, which the prices for which are already rising, or should it be in the alternate asset classes, a gold ETF, gold mutual fund, maybe the sovereign gold bond schemes as well?
Well, if it's a tactical investments for just garnering about 10% returns and probably a 12-month time frame that you're looking at, then ETF or gold bees could be one of the options that you could be looking at. But if it's for a purpose of converting into jewelry from a long-term perspective, then physical gold could be one of the options. However, sovereign gold bond has been garnering a lot of attention, and if the time horizon is really big, say probably 5 years at least or upwards of 8 years, then that's the best investment bet. It gives you additional 2.5% coupon, and the gains at the end of maturity are kind of tax free. So, if that's the time horizon, then sovereign gold bond is the favorite asset.
Right. Navneet, talking about again the price trends, India is the world's second largest gold consumer. And like you also pointed out, that right now there is a lackluster demand because of the sky high prices. But could the drop in the purchases also limit the rally in global prices because we are the second largest consumer?
Well, we are second largest consumer, but as far as a lot of other central banks or global
Yeah.
demand is concerned, it's pretty reasonable and pretty steep at this point in
Hmm.
time. A lot of smaller nations have been buying gold through their central bank route. Of course, the domestic consumption India is pretty steep, and this year the anticipated demand is around 700, 750 tons. As of now, we stand at a demand of about 400 tons, which is pretty much in line with what it was the last year. I don't think that these higher prices is going to be very detrimental, but it's not going to add very significant demand booster as well. So I think unless we have a healthy correction in bond FD rates or a reasonable correction into equity markets, the flavor for gold is going to be little lackluster.
Okay. Another very important point that I wanted to discuss, which the World Gold Council has also pointed out in its report, is that these higher gold prices, the trend that we have seen, has also prompted most of the people in India to also sell their old jewelry and coins, leading to a sharp jump in the scrap supplies by 37% from a year ago as well. So your sense of on-ground reportage, does that also say that perhaps people are using this level to exit some of their holdings in gold?
Well, Sakshi, the number sounds a little distinct, but it is up by 27%, but in totality, it is to the tune of about 20 tons. So, in a 750 tons demand market, 20 tons is really very small. It's about
Okay.
3% of the entire market piece. So, I don't think we should read much into it, but definitely, time and again, when prices shoot up very significantly, people look to invest in alternate assets, and people who bought around 50 or 48,000 are getting about 20% comfortable returns, so they're looking for exits. And mind you, bank FD rates are giving you about 7.5% kind of fixed return at this point in time. And from a 3 years perspective, I don't see gold giving you 25% plus returns as compared to what a small saving rate could give you. So that is where a lot of money is also flowing into bank FD rate.
Okay, fair enough. Well, thank you so much, Navneet, for sharing all these insights into what the festive season could look like for gold purchases, gold demand, and the prices as well. For now, it looks like a lackluster demand to begin with. Up until Diwali, if the sky-high prices remain, the demand for gold could again falter in this season. World Gold Council believes there could be the lowest volumes in the last 3 years or so. Navneet believes that, till the time consolidation takes place and another 5% kind of a drop really comes in, that is when you should actually look at buying your gold in case you're looking at an investment perspective. Thanks a lot, Navneet, for being with us onto this special edition.
If you like the video, do like, comment, share and subscribe.